Imagine being a giant in the auto world, dominating roads, selling millions, leading innovation, only to watch your empire collapse almost overnight. That's the nightmare Ford, GM, and Tesla are facing right now. Because China, the world's largest car market, has just slammed the brakes on American automakers. And the crash isn't just financial. It's strategic, brutal, and unstoppable. This isn't just about cars. It's about who controls the future of transportation. In a move that's sending shockwaves through the global auto industry, China has officially launched a full-scale economic offensive against U.S. automakers. And it's already working. First, China rolled out massive new subsidies for its own electric vehicle EV companies like BYD, NIO, and Xpeng. These subsidies make Chinese cars far cheaper, not just in China, but across Asia, Europe, and emerging markets. Meanwhile, U.S. brands like Ford, GM, and Tesla are being priced out, unable to compete without either slashing profits or abandoning markets. Second, regulatory barriers have gone up almost overnight. China introduced new environmental standards and import restrictions that specifically target foreign-made vehicles, especially large U.S. models like trucks and SUVs. These regulations force American companies to spend millions on redesigns or face being blocked from the Chinese market altogether. Third, China has weaponized consumer sentiment. State-backed media campaigns and subtle government signals are encouraging Chinese buyers to support national brands, painting American cars as symbols of foreign interference. And it's working. Sales of Ford, GM, and even Tesla vehicles in China are plummeting, while domestic EV brands are seeing record-breaking demand. But perhaps the most devastating blow came quietly. China has begun restricting access to critical materials used in car manufacturing: rare earth metals, lithium, and specialized electronics, materials dominated by Chinese supply chains. Without steady access to these resources, American automakers can't build the batteries and tech systems needed for next-generation vehicles. The message from Beijing is crystal clear. If you want to play in our market, you play by our rules, or you don't play at all. For decades, China was seen as the golden opportunity for U.S. car makers, 1 billion potential customers. Today, it's becoming their biggest graveyard. And Ford, GM, and Tesla? They're watching their future vanish in real time. For years, the Chinese market was the crown jewel for U.S. automakers. Now it's turning into their biggest liability. Let's start with the numbers. In 2020, China made up over 20% of Ford's global sales and nearly 30% of GM's. For Tesla, China wasn't just a market, it was the engine of their global expansion, representing nearly 1/3 of their total deliveries. But those numbers are now in freefall. With new Chinese EV brands flooding the market at lower prices, Ford and GM are losing market share fast. In the first quarter alone, Ford's China sales plunged by over 40%, and GM reported its worst performance in a decade. Even Tesla, once the shining star in China, is facing slashed prices, shrinking margins, and a wave of government-supported competition it simply cannot outrun. The problem is deeper than just sales. Ford and GM made huge investments into Chinese manufacturing plants, joint ventures, and R&D hubs over the last 15 years. Now, many of those assets are becoming stranded, factories operating at half capacity, partnerships being quietly dissolved, and billions in capital at risk of becoming dead weight. For Tesla, the situation is even trickier. Elon Musk invested heavily in Tesla's Gigafactory Shanghai, betting big on China's growing appetite for EVs. But with China's national push to dominate the EV market, Tesla is facing increasing regulatory pressure, tighter margins, and an obvious political reality. China doesn't want a foreign EV leader anymore. All three companies are being forced into painful decisions. Massive price cuts to stay competitive, destroying profit margins. Pullbacks from long-term investment projects. Workforce reductions inside China-based operations.
And that's just the start. If the current trajectory continues, the losses won't just be measured in billions of dollars, They'll be measured in market dominance, brand trust, and strategic position for the next generation of the auto industry. In simple terms, Ford, GM, and Tesla aren't just losing a market, they're losing the future. The world isn't just watching US automakers struggle, it's watching China take the lead. Chinese car makers like BYD, XPeng, NIO, and Li Auto have quietly evolved from low-cost imitators into global innovators. They are building electric vehicles that are cheaper, faster, and in some cases technologically superior to anything Ford, GM, or even Tesla are offering. Take battery technology, for example. Chinese firms, backed by massive state support, are years ahead in solid state battery development, batteries that charge faster, last longer, and cost less. While American companies are still researching prototypes, Chinese brands are rolling them out into commercial vehicles or smart technology. Modern Chinese cars are packed with advanced AI, autonomous driving features, and seamless digital ecosystems that American models can't match without expensive upgrades. And then there's scale. China isn't just producing millions of vehicles for its domestic market, it's rapidly expanding exports into Europe, South America, the Middle East, and Southeast Asia. In fact, in 2024, China overtook Japan to become the world's largest car exporter, a title once unimaginable. While Ford and GM are fighting to survive in China, brands like BYD are building global empires. It's not just a price war anymore. It's a technology war, a speed war, and a scale war, and the US automakers are losing on every front. The terrifying reality: even if Ford, GM, and Tesla escape China's market collapse, they might find themselves outclassed everywhere else. What's happening in China isn't staying in China. The collapse of US automakers' dominance is spreading worldwide fast. As Chinese car companies expand aggressively into Europe, Latin America, Africa, and Southeast Asia, they are undercutting Ford, GM, and Tesla on price, speed, and technology. In Europe, where green energy policies are pushing rapid EV adoption, Chinese EVs are flooding the market, offering affordable alternatives at a time when European and American brands are struggling with higher production costs. Consumers aren't waiting, they're switching. In Latin America and Africa, where affordability matters most, Chinese vehicles are already becoming bestsellers, stealing what used to be safe markets for Ford's and GM's lower cost lines. Even in the United States itself, the pressure is growing. Chinese automakers are setting their sights on penetrating the American market either through direct sales, partnerships, or overseas plants in Mexico and Canada. If they succeed, they could challenge American companies on their own home turf, something that once seemed impossible. Meanwhile, Wall Street is reacting. Shares of Ford, GM, and Tesla are sinking as investors realize the threat is no longer theoretical, it's unfolding in real time. Billions of dollars in market value have already been wiped out, and global investors are starting to bet heavily on Chinese EV companies instead of American ones. The global auto battlefield is shifting. It's not about who makes the best engine anymore. It's about who dominates batteries, AI, digital ecosystems, and affordability. And right now, China is pulling far ahead while America is spinning its wheels. The road ahead for Ford, GM, and Tesla is steep, treacherous, and unforgiving. For Ford and GM, survival will depend on radical reinvention. Both companies must accelerate their electric vehicle programs, cut costs aggressively, and forge new alliances, not just to compete in China, but to protect their markets in North America and Europe. Without immediate innovation and restructuring, They risk becoming irrelevant relics in a world racing toward electrification and automation. Tesla, while better positioned technologically, faces a different kind of threat. The brand's premium status is under siege by faster, cheaper, and smarter Chinese EVs. To survive, Tesla must keep pushing the frontier with better batteries, autonomous driving breakthroughs, and a diversified global manufacturing footprint that reduces reliance on China. But innovation alone won't be enough. The harsh truth is, unless US automakers adapt faster than ever before, China will not just outpace them, it will erase them. There's also a political dimension. Washington may be forced to step in with tariffs, incentives, and protectionist policies to shield American car companies from being overwhelmed. But protection can only buy time, not competitive. The future belongs to those who build faster, think smarter, and move boldly. Ford, GM, and Tesla are now in a race, not against each other, but against the New World Order of transportation being shaped in Beijing, Shenzhen, and Shanghai. And in this race, there are only two outcomes: reinvention or collapse.